This is Zach Mir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 4th of January, starting with the FTSE 100, which is in this little range between around 76.40 and 77.80, that sort of thing. Didn't quite get up to our target for the end of last month, 78.10, but obviously we could have a go in January. Upside valid while we're above the old February resistance line there at 76.10. That should hopefully take us to 78.10. If we're in bullish mode and get through 78.10, then the next level up would be 80.60, which is an April resistance line projection from last year. The positives at the moment are the way that the 50 and 200-day moving averages are both rising. That suggests that we could have a golden cross in the next few weeks, let's say, definitely before the end of January, and the run up to a golden cross tends to be the strongest part in the cycle. So if that is the case, that should start kicking in pretty soon. There's an uptrend line in the RSI window as well, which has not been broken since the end of October, so that's also quite encouraging, and like to see the RSI stay above 50, whatever happens. Moving on to the DAX, and here you can see that had a bit of a rug pull. We were having support there, 16,600. We were allowing down to 16,500 in the old July resistance for this market, and so far that has been a wise thing to do. In fact, we just went slightly below it. We are in the aftermath of a rising, rather a golden cross between the 50 and 200-day moving averages, so hopefully that'll kick in as providing fresh momentum. Nightmare scenario at the moment is that we have to head down to 16,100 August-September resistance before the market then kicks up again. In terms of the upside, if we get through 16,900 on an end-of-day close basis, the next level up would be up towards 18,000 by the end of next month. But at the moment, obviously looking slightly ropey on the bull side. Going on to the Dow, and here it was looking a little bit tired, and I suppose a little bit of a risk of a rising wedge breakdown. The support line there around 37,300. We've already been prepared for a test of 37,000, which was the old December support there for this market, so that might still have to happen. So on the upside, we really need to get through 38,000 and that March resistance line projection to give us the full upside there towards 39,300 in the top of that rising trend channel from October. But so far, both the DAX and the Dow have at least maintained the recent and kept most of the recent gains, which is pretty impressive, whatever happens next. Moving on to Bitcoin, and here also a bit of a rug pull, but support found above the rising 50-day moving average, which is actually a positive continuation signal, and we're actually nominally back within that rising trend channel from October. So in terms of effort made here, I would say it's at least still 9 out of 10. We bounced off RSI 50 as well, which is encouraging. So still on for up to 50,000 by the end of this month, while we hold above that 42,000 area, which is basically the area from the 50-day line and a little bit above. Moving on to gold, and here the story has always been about 2060, especially in the recent past, and disappointing that we've broken back below that. Initial support here at the 50-day line around 2018. Below that, worst case is that we have to test the 200-day line at 1978, but ideally we stay on the right side of 2000 because that is a big psychological level. Moving on to the stocks, and starting off with one of the 24 for 24, Ananda, and almost as if the company heard, or the shares heard the update, very strong start to the year, breaking our initial target there at 0.38, above 0.38 now we're looking for up to 0.56, which is a June or post-June resistance line projection there. Upside valid while we hold above recent resistance around 0.34 for Ananda. On to Angle, which has had lots of momentum provided for it on social media, especially Twitter, and that's where I sort of saw it for the first time. But we've broken a resistance line there at 10p. We did that at the beginning of last month. We had the sideways shuffle above a rising 50-day moving average, and our target was up to 23 pence, and not far off that now. The next level up, if we get through 23, would be the line I'm about to draw now, which is an ambitious looking 35 pence by the end of next month. But a gap through the 200-day moving average, a very strong signal, and as I said, above 23 we get up to 35 by the end of next month. Next up is Armadale, another stock which seems to have a lot of social media backing. Here we've gapped up above the 200-day moving average. That was around 1.1 pence. Taken out our target at 1.13 pence, and above that resistance line there from the end of July, looking for up to 1.8 pence by the end of next month. So a nice looking situation there. Good news from C4X regarding Astra giving it some money yesterday, and here the shares trying to hold the top of the gap there around 11.5 pence. Might have to look for a little bit lower than that, but while we're above 11.5 pence in the 50-day line on an end-of-day close basis, the upside here up towards 17 or 18 pence by the end of the month, although I have to say at the moment it looks a little bit tired after the gap higher. Moving on to another stock which I haven't looked at for quite a while, and that's Enwell. Here you can see that we've gapped up above the 50 and 200-day moving averages, above that 200-day line at 14.5 pence, looking for 28 pence as soon as the end of next month. If you're cautious, which you may very well be, then you would wait for an end-of-day close back above last month's peak at 17.5 pence, but before assuming 28 pence was on the way. On to Huddled, which is a stock which I think not many people look at, but anyway, here we've broken through with December resistance at 3.2 pence. Above that, we're looking for our top of, I suppose it's a rising trend channel really, top of rising trend channel target there up to 4.5 pence by the end of next month or even sooner. Upside valid while we're above that 3 pence 200-day moving average area. Next up is a Likewise Group, and here we've gapped above the 200-day line as well, another strong signal at 20 pence. Above that, looking for up to 30 pence, which is the top of a broadening triangle from the beginning of last year. Just need to see that 200-day line start to curl up as well to give extra momentum. Looks as though biotechs are a little bit in fashion at the moment. Even Reneuron has turned around, broken that line of resistance there from October, around 3.6 pence, and above that we're looking for 6 pence as soon as the end of next month. If you're cautious, you wait for an end-of-day close back above the 50-day moving average at 4.3 pence before assuming the upside is on its way. Things starting to stir at Tiger Royalties, which is after a long time, let's say, after a big delay. Here we've got a possible rising trend channel base from the end of 2021. Top of that channel there at 0.43, and that is our target while we hold above recent resistance, basically 2023 resistance around 0.18, but obviously a bit of a slow burn situation for some to look at there. Onto a stock which had a decent RNS today, which was Tekmar, and another stock which has gapped through the 200-day moving average, in this case at 11 pence. The longer we stay above that, the greater the chance of 17 pence, hopefully as soon as the end of this month. Surprise of the day and the week perhaps is Vast, where I covered the stock yesterday, and the shares have gone up. Despite that, we've broken through the 50-day moving average at 0.13. Above that, we've been looking for 0.23, and that should hopefully happen sometime this month. Interesting that there's been no cash call or anything else to hit us with, or hit the share price with in the meantime. Get through 0.23, the next level up will be the upper parallel of that resistance line at 0.3. But let's see if we can get up to that level without any rug-pulling event in the meantime. On to Wildcat, which was making lots of noises at the end of last month. Here the share's trying to give us a new leg to the upside. The key here is getting above the 200-day moving average at 0.41. Above that, then we are looking at 0.6 and the extra target they have there from that September resistance line projection. Looks okay while we're above the mid-30s on Wildcat. Finishing off with another stock which has started to stir after a long time, Xtract Resources, breaking a line of resistance there from July. That is at basically a penny, and above a penny we're looking for up to 1.4 pence by the end of next month or sooner, especially if we can get decent closes above that 50-day line around current levels. Bullish divergence line there as well to help the momentum along. That's it from me today. More updates tomorrow.